2024 IRS Dirty Dozen Tax Scams. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's Adam Talks, I'm going to review the 12 best, if you want to call them best, in quotation marks, tax scams of 2024. And they're not so great because the IRS is well aware of them. But this is probably one of my favorite shows of the year because you get to go through some of the craziest tax schemes and tax strategies that people come up with. And, the IRS is not so stupid. They're definitely a little bit behind when it comes to catching up on some avant-garde tax planning, aggressive tactics. But some of the 12 dirty dozen scams that I'm going to talk about are just so ridiculous. And some are really important because they focus on, phishing and other really examples and lessons that we can learn, whether it's from a tax standpoint or in other courses of our daily business operation. So this is important. It's fun because you get to go through some of these crazy schemes, but a lot of these are somewhat known and have probably been discussed, maybe at cocktail parties, or maybe someone who's kind of brought them to your attention. And it's important to just know that, hey, these are transactions the IRS is well aware of. They're listed transactions and don't want to go anywhere near them because the IRS will come after you and you will not win. So these dirty dozen, the IRS releases them in a 12-part series. I'm going to summarize them so you don't have to read all these rulings. And it's 2024-84, 85, 87, 89, 91, 92, 96, 98, 100, 104, and 105. Okay, and I'm going to summarize them. But they've been doing this since 2012. And this is their way of saying, hey, you're on notice. If you do any of these 12 scams, they're listed, and it's not just a slap on the wrist. There's potential greater penalties. Not potential fraud, jail time, criminal, potentially. So you have to wake up and at least acknowledge that these types of scams exist and don't go anywhere near them. So I'm just going to summarize them in no particular order, just kind of go through in a general format what these 12 are. So the first one, which has gotten a lot of attention, are these syndicated conservation easement arrangements that generate high tax deductions. And you basically allow investors to claim these charitable contribution deductions significantly above what you invest in these conservation easements. And the IRS is basically saying these are a sham. They're not real, and they're grossly inflated deduction. So if anyone's offering you these syndicated conservation easements that are like charitable contributions that you get these massive deductions, stay away from them. This is something the IRS has been on for a while. Another one is captive and micro-captive insurance companies. I've seen these for, people have been doing this for 30 years. Even when I was in private practice early on, I remember doing some research on these like Midco, these micro insurance companies. You basically put some money in for insurance and you generate high deductions for the contributions, and they're really not used for legitimate insurance. These are very well marketed. They're not going to be marketed to a lot of small businesses. These are generally marketed to businesses with tons of cash flow, family offices, enterprises with lots of cash flow that needs deductions. And the IRS has been on this for, as I mentioned, 20 plus years. Okay, so anyone that's talking about captive insurance, micro insurance, don't want to go near them. These essentially you pay excessive premiums to generate these deductions. You're not really getting any insurance. It's there, you are buying insurance. A lot of these are offshore in the Caymans. And it's a way to just stock away, get high deductions, and shelter income from tax. So just be careful of these. These are very well marketed. Another one is where U.S. citizens are essentially making, this is crazy, retirement contributions in foreign jurisdictions like Malta. And this is a way to take advantage of some tax treaty stuff. And you're able to get high contributions, and you're getting exemptions from U.S. income tax on the gains and earnings. You don't need to do that. You can do a Roth IRA or Roth 401k. That's what I always tell people. There's a lot of plays in the tax code that's going to get you the deductions or the sheltering of income you need, you don't need to do any crazy stuff. There's a lot of holes in the tax code, especially in the retirement world, i.e. Roths, mega backdoors. The Roth is really the greatest legal tax shelter. So you don't have to do these crazy stuff, and especially contributing to foreign retirement plans. Very, very unnecessary. I've actually, I've been doing this a long time. I get calls from some of the smartest but wackiest people, and I've been pitched this thing a bunch over the last several years, and I'm always like, no, you cannot. If you're American, you cannot contribute to a foreign retirement system if you're not employed there, and you don't need to. You can just do a Roth. So I'm not interested. Another thing is digital assets. There's promoters out there that saying invest in digital assets. No one's going to know about it. The IRS is not going to know about it. It's a great protection if you get divorced. Your ex-spouse is never going to find it. Their lawyers won't find it. It's not true. I have friends that do forensic accounting. They'll find it all. There's ways, right? Especially, some people say, well, I can buy cryptos on DeFi. I don't have to buy them on US exchanges. I'll buy them on foreign exchanges. And it's going to be very hard for the US or for my ex-spouse to find out. I wouldn't count on that. There's ways to find out, and it's not as hard as you think. So just be cautious about any promoter saying, buy these coins and buy them in this way, and no one's going to ever know you own them, and you can sell them without paying tax. First of all, it's tax fraud because on your 1040, you have to disclose if you have purchased any digital assets. So the IRS will be aware if you check the box. Yes, if you lie in your tax return, then that's obviously fraud. Okay, the IRS has been talking about, and this is something that is important for not just taxes, but everything we do is phishing and smishing scams designed to steal, your info, right? People say they work for the IRS, you're under audit, give me your social, and they will file fraudulent tax returns, or they'll make you click on a suspicious link saying they're attached to the IRS, or ask for personal financial information. Just be very careful. No one calls and asks for social or financial information. Do not give anything out. I always say, send me an email, or just don't answer the phone. Do not give your social. Do not give financial information or bank account info to anyone. Yeah, anyone. There's no need to. You can ask for their phone number, call them back. You can find out, ask for their name, Google them. Do not give anything out unless you know who this person is. And you have to be careful with deep fakes because of AI, whether it's voice manipulation or even visual manipulation. You have to be super careful on who you give out. So my thing is I don't give my social financial information to anyone. I'll never give it out unless I know the person in person or I'm communicating with that person in an ongoing conversation. So just be very, very careful. This is a dirty dozen trick that applies in all contexts. Okay, another one, I've talked about this, the employee retention credit, the ERC. The IRS is not messing around with this thing. I have friends that sell this stuff. In some cases, legitimate companies are entitled to these ERC credits, which gives you a credit for each employee you've hired during COVID. I read somewhere that even now, after the IRS has cracked down, they're still getting 20,000 of these a month filings of people, even though the IRS said they're not processing them anymore. People are always looking for free money, but they're cracking down on this. You're looking at potential criminal consequences if you've lied about your ERC application. Some of these companies that you may work with will claim they'll protect you in audit. It's questionable. They'll probably just shut their doors and move on, and you're going to have no one there to support you. Now, if you have legitimate claims for an ERC, your business is closed, you had a reduction in profit or revenue, whatever those qualifications are, that's fine. But work with an accountant. Do not work. I'm not going to say do not, but just be careful working with some of these companies. They're not in it for your own interest. They take 20% commissions. So they're really just trying to process applications. Talk to an accountant, make sure that you actually are 100% eligible for it. Even though the window's closed, people are still clearly applying. So just be careful. Another one is online account scammers, where they're trying to create, they make you create online IRS accounts, and then they basically steal your money, your identification. It's kind of the same with the phishing. instead of clicking on links or asking for information, they basically pretend they're the IRS and make you kind of fill out fake tax returns, fake tax financial statements. And then they steal your information and file a return, and then they take the return. They don't send it to you. So again, if people are saying the IRS doesn't call you randomly, so just be careful. If it just doesn't seem right, just say no. Don't give up your information. I've seen it. They'll harass you. They'll call you 5, 10 times a day, hoping eventually you'll pick up, block their number, keep blocking it. Eventually they'll go away. And it's just, I spoke to the FBI about this because we had a client that had an issue, and they basically said it's like it's like a car thief. They just will open doors to a car, and eventually, if one car door is open, they'll steal it. So they're just going to door knock, right? And eventually, if someone picks up the phone, they're going to attack. So just be careful who you pick up the phone for. The IRS does not call and just say, "Hey, give us your information." They do not do that. Another one that's interesting is improper fuel tax credit claims, where they will basically make, promote that it applies to off-highway business and farming use. Promoters will basically mislead taxpayers about fuel use and create fictitious documents, and basically get deductions for these fuel tax credits, even though you don't satisfy them. So if you have promoters, accountants are not going to do this. They're not going to risk their license trying to generate fake credits, but there are promoters out there that say, "Hey, pay me for this information and I'll give you all these tax credits." And they'll basically lie and make up fuel receipts. So just be super careful. The next one is these offer and compromise mills, basically these services that say they're going to reduce your tax burden with the IRS and negotiate for you. And a lot of times they don't do any of the work. They take your money and they don't help you at all. If anything, a lot of times they're just scams and they actually don't do anything. Some do try to help, but they'll ask for tens of thousands of dollars to try to reduce very minimal amounts of tax when they may not be able to, right? So they'll take the case, ask you for money up front and barely do any of the work. And the fees just are super excessive in terms of the services being performed. So just be careful who these people are. Sometimes it's better to work with a tax professional, like an accounting firm, CPA. Just make sure you know who you're working for or working with. And if the fees just seem too high, they probably are and don't make sense. Another biggie the IRS has been really after is fake charities, right? Where you're basically making charitable deductions to fake charities that don't exist, like natural disaster stuff. And promoters will say, "Hey, make a tax deduction to this place," and the charity may not exist. Or worse, what happens I've seen is, "Hey, make a $10,000 charitable deduction to this charity," and then the charity gives you back $99,000 in cash. Right, so be careful about that where you're getting high tax deductions for either fake charities or incomplete charitable contributions. So another thing to be careful of. And the one of the last ones is unscrupulous tax preparers. People that encourage you to file fake tax returns, or you don't have to ever pay tax, it's unconstitutional, things like that. Don't fall for it. Use real tax return preparers. They could be, obviously, if CPA, the better. A real accounting firm. If they're not enrolled agent, ask for their enrolled agent ID. Make sure these are real people. If it sounds too good to be true about giving you all these deductions, whether it's for the easements or these fuel tax credit claims, you have to pay tax, right? Anyone that says they have this hidden trick that's not going to that's going to help you evade taxes, and only they know about it, you have to keep it secret, it's probably a scam. And be careful, because if it was so well known, we'd all know about it, because the tax code's wide open, right? Anyone can read it. And trust me, this guy that works out of a strip mall is not going to know more than, these smart tax attorneys in New York City that, know 1,000 times more than this person does. So just be very, very careful about this stuff. Better pay your tax. You want to minimize what you have to pay, and you want to be smart, and you want to use the tax code to your advantage. You don't have to overpay, but you have to draw the line to what's real and what's fake. Okay. And then the spear phishing is bad stuff, right? Cyber criminals, they impersonate real people. and they use fake emails to get sensitive data, right? So they try to be friends with you, they try to say they know people, and they ask for fake info in order to perform identification theft or financial theft. So they get into computer systems and they wreak havoc. So these are text messages, emails, phone calls. This is the spear phishing or the identification of phishing and smishing scams. It's all together. The IRS broke them up in terms of different scams, but they're all part of the same scam. Bad actors trying to get your sensitive information, whether they claim they work for the IRS or a state agency. Be careful. And this is a good set of principles to go by, not just for tax preparation or tax filings, but also just dealing with everyday business, everyday personal activities. Just be careful who you talk to, be careful what information you divulge, be careful what you disclose. Make sure you know what you're doing, who you're talking to, because once they get some of this information, they'll do bad stuff. They can get your SIM card, control your phone, which then controls online banking. They can steal your identity, fake tax returns, make a mess. So just be super careful. And then obviously, like social media advice, this goes back to unscrupulous tax preparers. Just know who you're getting advice from. Like, I'm a tax lawyer. I do YouTube videos. I do podcasts. I'm going to tell you what the rules are. But if you're getting legal advice or financial advice from people online, social media, Instagram, Twitter, YouTube, and they're not lawyers, they're not financial advisors, not CPAs, like, be careful, right? If someone's writing a book on tax advice and they're not a tax lawyer, they're not a CPA, maybe you shouldn't buy the book, right? If someone's doing a video on capital gains and they're not a CPA, they're not a tax lawyer, like, why would you listen to them, right? If someone's telling you that they can generate all these tax deductions for you, they're not a CPA, they're not an enrolled agent, they don't have a tax or finance background, why would you listen to them? So just because someone has a YouTube video or they're on Instagram or Facebook, Twitter, don't believe them. There is fake news. I've seen it in my situations. Like, fake news does exist. There's people that just, some have good intentions, not all are crooks. Some really want to help people. They just don't have the expertise, right? Just like I don't pull my own teeth. I don't give myself a physical because I'm not a doctor. So why would I give advice if I'm not a professional? Now, some people do some reading, they watch videos, they're like, oh, I understand the retirement system. I can give self-directed advice. And maybe, 70, 80% they get right. But it's that 20% where they either can't spot the issue, they get it wrong, or they misadvise you. That's where you get into real trouble. So I have a big problem with that, just because I work really hard to go to law school. I have a master's in tax law, worked at some of the largest law firms in the world for 9 years. Like, I put the work in. So when I watch some of these videos of these random fools that say they're experts on self-directed IRAs or Roth conversions or prohibited transactions, just like, dude, you don't know what you're talking about. You're getting it wrong. You're telling people incorrect information. And I have to then spend my time, and my team spends their time having to discredit the information that these people have received. And this happens 50 times a week, where our team will get an inbound call saying, hey, I saw this video by this person, and they said you can do this and that. I'm like, where did this person go to law school? Oh, they're not a lawyer, but they have a great following on YouTube. I've seen them. I really like their videos. Okay. So would you go to a taxi driver, Uber driver to tell you if you need a cavity filled or not? Like, no, why the hell are you listening to these people? But he said you can do A, B, and C. I'm like, well, you can't do it. Or he says you can't do A, B, and C. I'm like, well, you can. Here's the tax code. So it's very easy to go film a YouTube video with your phone, selfie, and then just talk all kinds of, whether it's intentional or not, all kinds of inaccuracy. So just be super, super careful of improper social media advice. And then some traps for high income earner taxpayers, where you're trying to get inflated donation deductions, aggressive charitable, something called a CRAT, charitable remainder annuity trust, which in the past has been seen as a legitimate way to make charitable deductions and also get income stream. But the IRS has cracked down on it lately. So just be super careful about promoters on cracks. There are law firms that have written opinion letters. I've seen them on these crafts, these child remainder annuity trusts, where you get deductions for donating funds to a charity, and then you get income from that charity for your lifetime. The IRS is not happy with them. They've listed the transaction. So just be super careful. They're irrevocable trusts. So people feel like, oh, I get the deduction, they're out of my state, but you also get the income stream, and it's just too good to be true. So just be careful. But that's really it. I mean, the big stuff the IRS is focused on is, and it's for our protection, obviously, the stuff that gives you high tax deductions, a lot of credits, shelters income. And then on the other side, they're here to protect us about improper advice, phishing scams, and online scams. And also be careful for the smishing scams and the just scammers giving people bad advice, like these spear phishing. And I love all these names. They're bad names. I mean, it sounds like it's not very harmful. Spear phishing, they're bad. These people can ruin your life. They can make it super hard to get back your life, whether they steal your social security, file fake tax returns, get SIM card access to your phone. I've had a client lose his phone. They got SIM access. They stole his cryptos from an exchange. They were able to get money out of his bank accounts, and it took him weeks to get back his life. And then he had to spend time fighting with the banks to get the money back. The cryptos he lost, couldn't get him back. And the money was not big enough, so the FBI really couldn't help him either. But he lost a good amount of money, and his life was turned upside down just by clicking on a link. He actually just clicked on a link from a text. That's it. I've heard other people who just got a call, right? Or became friends with someone on LinkedIn and started sharing information, and they showed them pictures of their dog and their kids, which were all fake. And they shared information. They started saying, we're going to go into business together. The guy wired this person a few hundred, started, I think, with 10 grand and 50 grand. And before he knew it, he was wiped out. So be careful. These dirty dozen scams are there to protect us. It's fun to talk about. Some of these things are stupid, like these easements. But be careful, because it's easy to fall for when you have a big tax bill and you want to lower your bill. You'll look for any way. And if the person seems credible, you may bite. So just be careful. You can Google IRS dirty dozen scams. If someone's trying to sell you something that just seems too good to be true, just Google it and you'll probably find it right there. That's it for today. I hope you guys enjoyed it. I've been doing these dirty dozen scam podcasts for the last 4 or 5 years, and they're generally around the same theme, right? High deductions, sheltering income, and then obviously just being careful for online scams and crappy tax advice. So have a great day. If you guys have questions, comments, leave them. Love to hear from all of you. If you haven't subscribed to our YouTube channel, please do. We drop 3 podcasts and 3 to 4 videos a week, including a YouTube live. So if you are subscribing, you'll know when I go live, and you can check out that video, or you can just check it out at a later time. Have a great day, and I'll talk to everyone again next week.